Hey guys, welcome back to the channel. This is Future Tradings with Mike, and today is September the 21st. It is Wednesday morning, and I wanted to dive a little deeper into a topic that I talked about a few weeks ago, and that's surrounding liquidity, and actually show you a trade setup and how you can actually use it to locate, find, and be able to trade areas of liquidity, especially it's areas where the institutions or banks are really trying to fake or fool traders out, and then they tap into an area, they kind of break right below it, and then move the market back in the same intended direction. Okay, so but I got asked a question about if it was possible to trade or to look for those liquidity grabs on different time frames, and yes, I showed you on the 12 range chart. Today I'm going to show you an example on the 24 range chart as well. But I trade range charts, so you may trade like the minute-based charts or tick-based or volume-based charts. So you have to kind of scroll or look at different a variety of different charts, whatever the case is. But you'll see those setups on really doesn't matter what time frame. So it's just some of the higher time frames you may not catch those or see those setups as often. And yes, it does not happen daily. You will not find that it actually happens all the time. And typically it happens during the opening of the session to maybe an hour or two after the session is open. So typically I'll say between maybe 9:30, 10:30, 11 o'clock pushing in or whatever the case is. But there are instances where I've seen to where it does happen later in the session. Okay, so just really depends. But can you trade the liquidity grab setup? The trading setup, and identify or locate it on different time frames? Yes, you can. I'm going to show you again, like I said, on the 12 range and on the 24 range chart as well. So without further ado, let's go ahead and jump right into it now. So this is a trading strategy setup that you can actually trade no matter what the financial market. It doesn't matter what you trade. It could be options. It could be Forex. Here on this channel, we trade futures. I trade the ES futures in particular. So, but yes, I'm going to show you here where I have this arrow line marked right here, or this arrow mark. This is a key area or a good setup opportunity where basically a fake out. But the way I like to, what I like to see is when it comes to liquidity grabs, I have to see where there is either equal highs or equal lows being taken out. And what I mean by that is where the market has come back after forming equal lows. So basically it makes a push up in the market, makes a low, makes a push up, pulls back, makes a similar low pretty much, and then the market at some point comes back to it, and we get a break of that area there, the support or a small area of structure there, meaning that say a candle coming down may wick out right below it, but then turn back up and then close with the body of the candle to the upside, and then the market continues pushing higher. And then it's the opposite, if the market is, if we see things from equal highs. Okay, so let's go ahead and jump into this and take a look at the first example that I have here. But again, what I'm looking for to identify, the first step is to always identify and see if there are equal highs or equal lows being taken out first, meaning price coming back to those areas, breaking slightly below it, and then faking traders out and pushing the market back in the other direction. Okay, so and then we're also going to talk about where do you take the trade going back to. Okay, so that we have to identify that area as well, because you will see how impactful or how powerful this type of setup can be. Like I said, it does not happen all the time, and you have to be very keen to what's going on real quick, because it typically happens right after the market opens up. Like I said, maybe the first hour or so, and then they fake traders out and move the market in a certain direction, or in the opposite direction. Okay, so the market may be kind of coming down, making lower lows and lower highs, and then boom, it starts pushing up. We got a low, pulls back, got a similar low or equal low, price pushes higher, comes back down, they break right below and take out slightly those two areas or those two equal lows, and then the market pushes higher. Okay, so let's go ahead and jump into that, and I'll show you right now. And again, like I said, this is a trading strategy setup that you can use no matter what financial market. Okay, for me, you know, when I'm looking for liquidity setups in the market and taking these type of liquidity grabs, I'm looking for, you know, I'm trading the ES. Okay, for me. All right. So here's an example right here. Not to kind of beat that up, you know, to death, but anyways, the market right here. This was on September the 18th. The market was pushing higher, making higher highs and higher lows. Okay. All right. And you have to be keen, like I said. Now this didn't happen. The setup started happening, meaning what was actually developing happened during that time frame between 9:30 opening Eastern time and 10 o'clock. Okay. But the actual move back to the area where the actual liquidity grab, you know, when the market came down, they snatched that area, they flushed liquidity right there and collected it, and then moved the market back up to the next area of liquidity. Didn't really happen until 12 o'clock. So it took 2 hours for the market to come back down to this area and basically break right below it, you know, scaling right below it and then turning back around. So here we go. The market started it made this low here. And then it starts to make these higher highs and higher lows. Okay, that's following, you know, price action and, you know, understanding what's going on there. So prices, you know, I always talk about this. What is it doing? It's making structure, but it's also breaking through area of structure here. Okay, and it's breaking above resistance. So it's making higher highs and higher lows. All right, it gets to an area right here. All right, makes a high. It pulls back. I see a low here. It's 10 o'clock in the morning Eastern time. Pushes up. Pulls back. It makes a similar low right here, or what we classify as an equal low. Okay, then it pushes up again, pulls back again. Okay, I still classify this more so like a similar low at least, or equal low, because it did come back to this zone, this area right here. Continues pushing higher, making higher highs and higher lows. All right, then at around about 10:45, the market starts turning and pivoting direction, making lower lows and lower highs back to the downside. Okay, what do you see happen? It does not come down here and take out this low, but what does it do? Okay, now price did come down and take out this low here and this little low here. Okay, but it didn't break the first instance, or the first, you know, the lowest part of the first low, I should say. Okay, this is the first low, pull back, similar low, equal low, second low, third low right here. So I'm looking for multiple lows to be, you know, formed or developed in the market. One here, one here, one here. Price pulls back. As long as it doesn't take out that last or the original low, where the buildup of the equal highs and equal lows started at, then I'm good. Okay. Now it does come down and wick out below it, but that's what we're looking for. We're looking for a wick of the candle below the last, or excuse me, not the last, but the first swing low that started everything in this setup. That started the whole liquidity grab setup. All right. So price pulls back, it breaks this little low here, but it doesn't take out that the first developed low that took place to form, you know, these similar lows. Okay, or this opportunity for where these similar lows develop at. So it wicks right below it. Okay. This green candle turns back around, closes to the upside. Okay, where do I get into the trade at? You can get in right here if you're aggressive, or I would wait maybe to get in right here at 76. Once this green candle breaks above, you know, the body of this red candle here. And then the next question is, second part is, okay, so where do I take the trade back to? Well, what did it do? It just came down here to tap into this area of liquidity that's resting right here, meaning these lows sitting here. It took it out and grabbed liquidity. So what do you think the market makers, the banks, the institutions are going to want to do? They're going to want to push the market higher to do what? Go back here, grab this money sitting up here, this liquidity sitting here. What do you see happen? If you got into that trade, the market does what it does. It has its ebbs and flows, pushing up, pulling back, pushing up, pulling back, pushing up, pulling back, and eventually goes all the way back up here to the top where this high is sitting at, which is an area of liquidity. So if you got in, say, for instance, more so on the conservative side and got in at 76, it runs all the way back up to the top right here at 39.03 or say 39.04. That's a major move. Nice move into the market. So, you know, you got it at 76, take it up here, boom. Nice move, okay? So that's the first example of showing you how to catch liquidity, how to trade that setup when it comes to looking for liquidity grabs in the market, okay? And that's what they did. They grabbed the area of liquidity. You want to move like them, okay? Again, like I always tell you, you don't want to be in competition with the banks, okay? You want to be able to move with them, understand what they're doing. They're coming down there, they want money. They're stopping traders out. They're taking it back to the top where they know money's resting at right here. They're going to grab that money as well, okay? So let's go to the next example. This example here, I'm going to show you, it's on the 24 range chart. This one was on the 12 range chart. Now, who can identify which day, you know, what's going on here, okay? All right? Can you guys identify where it's at? Of course you can because I put the arrow right there. But you have to be able to see these real quick, these setups kind of setting up. Again, this trade setup does not happen or really take place for the opportunity for you to get into it until about 12:45. But it was already developing during that time frame which I talked about, between that 9:30, 10:30, 11 o'clock time frame once the market opens back up. Okay, so right here, the market is trailing to the downside, making lower lows and lower highs. It makes and imprints a low right here, okay? Turns around, pushes up, pulls back, makes a equal low or similar low right here as well, all right? So, what do we look for? I'm looking for at least 2 minimum equal lows or similar lows, okay? Price pushes up, makes higher highs and higher lows. Excuse me, higher highs and higher lows. Yes, to the upside, okay? It comes up here, makes a high sitting up here, all right? And then price does what? Turns direction, starts moving back down. So, when price turns direction and starts moving back down, what's sitting here at the top here? At the top of this high, liquidity, okay? So, we have to be mindful of that as well. You know, first off, be mindful that there is money resting right there, okay? So, as price is moving down, I say, okay, price is moving down now, making lower lows and lower highs, but I'm keen to know what's sitting here is liquidity. Price moves on down, and I'm looking to my left-hand side of my chart, and I say, okay, here's an area here where we got some equal lows right here, all right? Price pushes down. It does not take out that, you know, that the lowest low right here, the first low that was that started developing on a move to the upside where it started making these similar lows right here. It pulls back. What does it do? It wicks right out right below. We're talking like 1 to 2 ticks, okay? And you got to be sharp with your eye and keen to be able to see this going on, all right? 12:45, all right? This developed around 10 o'clock on September the 16th on the 24 range chart, guys. 24 range, okay? So it comes down back down to the area. It wicks out right below the low here. 1 to 2 ticks. Does not really, you know, close with the full body candle to the downside, taking it out. Turns back around. Green candle or closes to the upside. The moment this candle here closes above that red candle right there, the body of that red candle, meaning right here at 60.5, I'm long. Where I'm going to take my long to? Back up to the area of liquidity. Where's that at? Right here to the high right here. So you get in here at 60.5, like I said, take it on up here to 91.5, whatever the case is. That's a major move. Major move, okay? You're talking 30, 31 points, whatever the case is. What did I say right here? 60.5 on 31.5. There you go. And then it continues pushing higher. Yes, it pushes up, pulls back. As long as it doesn't break this area right here. So what do you place your stop loss, people say? Okay, well, the bottom end where that candle wicked out, okay, you put your stop there, but I wouldn't put it tick to tick right at the back end of that wick. Give yourself some room, okay, because you never know what can happen. They can come back down here, stop right here to the tick at the bottom of that wick out candle right there, and then move the market higher, okay? You saw them pulling back right here. They were only within a few ticks of coming back to this area right here. So give yourself a few areas of room right here. I typically say between maybe 8 to 10 ticks right there, okay? That should be comfortable enough to be able to carry you through. So, but anyways, it pushes up, pulls back, of course. All markets do that. They have their ebbs and flows, you know, when they're moving in a certain direction. And then it goes all the way back up here to the high where liquidity sits at and then pushes higher, okay? So there you go. Second example here showing you on the 24 range. All right, last example I want to show you guys, show you. Now here's a single low setup, what I call, so we don't have those equal lows or equal highs, you know, situation. This is more of a single low setup. And yes, you will find be able to trade liquidity grabs surrounding even on a single low setup sometimes. But be careful because it could be a lot more risky, and you have to spot it quick. Okay. Now, typically, I like to see at least two equal lows or two equal highs or more to be able to trade. This type of trading setup or this setup here, because the fact is like the more that price builds, say similar lows or equal lows or similar highs or equal highs, whatever the case is, and price comes back to those areas and kind of takes them out, just for a short instance, the probability of price moving back or going back in the opposite direction is a lot greater. Okay, now here we do have a single low situation here, and we're watching it unfold here because again, this is off the 12 range chart. This was around 10:30, like I said. Here we go on September the 9th. All right, so the market's moving higher, making higher highs and higher lows. Okay, makes a high here, pulls back, makes or imprints a low right here, and then it starts pushing to the upside again, making a new high here. Then it turns around, starts pushing back to the downside. What do I see here? And I know here once price leaves this area here and makes its high, is the fact is that there's liquidity resting right here. There's money in the market being left behind. All right. So the market pushes lower. It comes back down to this low right here. Now we don't have a situation like I said where we have equal lows or similar lows here. Okay. We just have a single low here. All right. And for me to want to really see to really want to get into the trade, I really want to see more so, like I said, those equal low situation here. We didn't get that opportunity here. So will I take the trade? Yes, I still would take the trade. It will be a little bit more risky, and I'm gonna take a stab at it. Because I see what price is doing. The left liquidity behind. Liquidity is resting down here. Price comes down. I get the wick out of the candle here, or the bottom of the candle, by right here. One tick, pretty much. Okay, one tick. All right. Price comes down to this area, and what does it do? It shoots. It turns back around. And what I'm looking for is a close of a candle back to the upside, okay? Right here, okay? Or basically right here, because we did get a price came back down here, wicked out, and then we had this red candle that formed. So basically, you can actually take your trade right here, 66 and a half. Or if you want to be more conservative, I would have got it right here on the aggressive side. You can be more conservative and get in right here at 40.69, okay? But what are we looking for, and where do we take the trade to? Back to an area of liquidity. Back up here to the tops right here. There's money resting here. So they come down here, swung below briefly or right below it, and then the market pushes higher. Okay, back up to this area of liquidity and runs higher. So for me, I would have got in here at 66 and a half. If you want to be more conservative, like I said, get in around 69, 69 and a half. Take it on back up here to 81 and a half, 82, somewhere in that area there, okay? And boom, you get into a solid move there. So this is just a strategy that I wanted to talk more into detail about and let you know that you can trade it no matter, using different charts, different time frames. It doesn't really matter. You can still look for those same setups. And some of those moves may be bigger, may be greater, depending on the time frame and what in which the actual trading setup actually happens. So the strategy works. Again, like I said, it doesn't matter the market you trade. You can trade it and use it as long as you can identify these type of areas to trade from. But you just have to be very quick and be mindful. Like I said, typically you'll see the development of these type of situations occur right after, sometime in the morning time, somewhere between 9:30 and maybe 11 o'clock. So just don't you can trade this purely if that's what you want to do. It's just the fact is that it won't happen every single day. It does happen, but sometimes you may have to, like I said, kind of scroll through multiple charts or whatever the case is to kind of see those setups. I mean, you may see it happen on the 24 range, and it may not happen on the 12 range. It just depends. You just kind of gotta catch it. For me, I'm a stickler for looking at my 12 range chart more so. So if I see that once the market opens somewhere within the first 2 hours, then a setup like that happen, then I'll trade it. Okay, I'm not always looking at my 24 range chart, but I do use that chart as well. I just don't trade from that particularly, but I use it to kind of glance at as well to kind of maybe get a bias or direction of the market. outside of the 60 range chart. But anyways, outside of that, that's all I really have for this video today. I hope you guys found some value, and hopefully this answered that individual's question about, you know, can you use the same trading setup or use a strategy here no matter what time frame, you know, or no matter, basically no matter what time frame. But like I said, it was twofold. I answered it twofold there. Yes, you can use it, you know, kind of looking at various time frame charts as well. And me, I trade the range charts, like I said. But you can trade, if you trade the 5-minute charts, you'll find setups on the 5-minute chart. If you trade volume charts, you'll find setups on the volume charts, tick charts. It doesn't matter. It just, you have to be able to see it. Like I said, it doesn't happen every single day. And you can see these type of setups occur on different markets as well. So again, it doesn't matter if you trade options or Forex. It doesn't really matter. Okay, so that's going to do it. Also, if you're interested in joining the Discord community, we have about 300 members in the community. We are future traders. We come together talking about, you know, the markets, about levels and zones, about strategies. So if you're interested in joining a wholesome group of fellow like-minded traders that trade the future markets, doesn't matter if you trade the ES or the Dow, the NASDAQ, crude, whatever you trade, come join us. All you have to do is find the link down in the description portion of the video below and click on it, invite yourself in free of charge, and come join us each day. Okay, if you have, it's also a great community. If you have questions, you know, always there's going to be someone that has an answer. I'm on there each and every morning, which I'm about to jump over right now to and start doing my live recorded trading. You know, I trade each morning. So also on the channel, you'll find my live recorded sessions where I actually post my live recorded trades on the channel here. So I have, I don't know, it's like 300 videos on the channel. So a lot of good content here on the channel, especially if you're a beginner trader. If you're looking, you're a newcomer today watching, and for the first time one of the videos here, please take the time to go ahead and subscribe to the channel by clicking on the subscribe button down below. Make sure to click on the bell and turn your post notifications on so that you never miss one of the uploads. For all those who have currently, you know, already subscribed, thank you guys. You guys know what it is. I appreciate you guys tuning in each morning or each time a video is dropped and watching the video content as well. Also, if you're interested in joining one of the tier memberships on YouTube, there's two. We have the Loyal Channel Supporter and the Elite Channel Membership, okay? Now, the Elite Channel Membership, it gives you everything that is included in the first tier, but you also receive additional perks like member shoutouts, as well as the most, I guess the biggest perk is the exclusive video content, which is not made public. You may be asking what that is. Basically, what that is my actual trade breakdowns. I go into detail and in depth so that people can understand the reason of why I took trades. So, you know, it's a step-by-step process to where I walk you through. You will kind of walk with me through my own, you know, mind frame in a sense, to where you get that in-depth thought process of what goes on while I'm trading. Okay, so I explain in detail the trades, why I took them, where I took them, how I took them, all that good stuff. Okay, so if you're interested in joining the Elite Channel Membership, just find the link down. Excuse me. How you find that is click on the join button on the homepage or the join button on any video on the channel. Okay, click on it. You'll see two tiers, and you can join either one. It doesn't really matter. Both of them have perk levels. Okay, so appreciate you guys for tuning in this morning, and I will see you guys in the next video because I'm about to get started rock and rolling and jump over to the Discord as well as start doing some trading. Thank you, and have a great day. And if you're trading, please be safe.